Is the emerging world in need of emergency funding? Nigeria has asked the World Bank and the African Development Bank for $3.5 billion to help plug a $15 billion hole in its budget. It's a result of the damage being done to Nigeria and other oil exporters by the collapse in the price of crude from $115 a barrel 18 months ago to about $35 today. Oil and gas supply about a third of Nigeria's GDP and 90% of its export revenues, so times are extremely tough. But emergency funding from the World Bank and the ADB? Isn't emergency funding the IMF's job? Emergency funding typically comes from the International Monetary Fund. That's what the IMF is, the world's lender of last resort. Nigeria says there is no emergency. It's just borrowing wisely at below market rates. The IMF says it agrees. But it looks as though Nigeria is getting IMF-style money without IMF-style conditionality. The lenders say they want to see progress on structural reforms, but the conditions will be far less stringent than they would have been in an IMF programme. What about the markets? The last time Nigeria went to international markets in July 2013, it paid about 6% a year to borrow $1 billion. If it went back today, it might have to pay more than 10%, a different proposition from the 3% or less it hopes to pay for its $3.5 billion. It's the same for other sub-Saharan countries who borrowed so cheaply in the boom years that are now over. And of course, it's not just African countries that are suffering under cheap commodities. Azerbaijan may be the next to ask for emergency funding. The World Bank may not have enough to go round.